investing in startups before they go public. The NASDAQ private market facilitates share transactions of startups like Pinterest and Business Insider, making it so that early investors and employees can find liquidity before an IPO or acquisition. But who has access to the shares? For more, we're joined by Jeff Thomas, President of Liquidity Solutions at the NASDAQ private market. Thanks, Jeff.
Thanks, Katie.
So there are a few different organizations facilitating share transactions like the NASDAQ private market. Who is getting access to the shares through NPM?
So NASDAQ private market is a company-controlled platform. So it's the companies who decide which investors they want to partner with. What we see most often is that the companies are choosing to work with institutional investors. With companies staying private longer, many public company investors, like mutual funds and hedge funds, are coming down to invest in private companies.
So mostly institutional investors. Do you ever see any individuals getting access to this, maybe individuals selected by the companies?
Sometimes companies will see a strategic partner in terms of a very high net worth investor who maybe can give them access to a different network than they would typically have with an institutional investor. But more and more we see companies still wanting to control their cap table. The interesting thing though is after the Jobs Act, private companies can now have up to 2,000 non-employee shareholders. So companies actually do have the flexibility. We just don't see them taking advantage of it yet.
So with 2,000 shareholders before they go public, does that mean by the time they finally go public that all the value is tapped out?
You know, we definitely see a lot of the value being created while companies are private. It used to be back in the 80s and 90s that companies would go earlier, much earlier in their life cycle, and all the value would be created in the public markets. Now companies, because they're waiting longer, a lot of the value is being created in the private markets.
That's definitely a trend we're seeing where companies like Uber and other startups in Silicon Valley are in no rush to go public. Why do you think that is? Is it because of regulation? Is it because of bubble concerns or because some startups like Twitter have a rough time in the public markets?
You know, I think it's two things. One, it's access to capital. As we talked about, there are a lot of new entrants into the space that provide great access to capital for private companies. And then second, I think it's control. They like the fact that they can control a lot more around their future destiny and their strategy as a private company. Once you get into the public markets, you obviously have a lot more investors that are buying and selling your stock, so a lot more people to keep happy.
And are you dealing more with employees giving up their shares, or is it also the company giving up equity through NPM?
You know, the number one challenge we're helping companies solve is attracting and retaining talent. By providing the opportunity for employees to sell a portion of their shares, it creates a great incentive for the employees and puts real value in their stock options. And what that does is it helps private companies compete against public companies for talent.
So you probably have an insight into what type of companies will eventually go public because you're dealing with them first. What kind of companies do you think we'll see do a real IPO?
You know, one of the interesting things that we're seeing in the private market right now, it used to be that only companies that were just about to go public would do one of these liquidity programs. Now we're seeing companies as early as Series B doing liquidity programs for their investors. So it's becoming much more common for people to provide liquidity earlier in a company's life cycle.
You have Hipmunk, DocuSign, Shazam. Those are some of the big name startups on your exchange. What other startups, what types of startups do you think we'll see on the NASDAQ private market soon?
So we really try to solve problems for companies of all different types. So as you mentioned, we work with companies like Shazam, who are based in the UK. We work with companies like The Motley Fool, which is actually a 21-year-old private company that's been around and has a number of shareholders. And then we work with a lot of high-growth startups in Silicon Valley. So we really do kind of span across different industries, geographies, and so we do have a lot of different types of private companies that we work with.
All right, well, thank you, Jeff Thomas from the NASDAQ. This is Katie Roof for FoxBusiness.com.